Hey, future homeowners. If you're a first-time buyer, you probably wonder, when should I shop for mortgage rates? The short answer is when you're under contract to buy a property. And this means that you found the place that you want to buy, made an offer, and the seller has accepted it. Now here's why. Once you're under contract, you typically have 15 to 60 days to close on the property, giving you plenty of time to complete your due diligence. Things like an attorney review, home inspection, and of course, shopping for a mortgage. But many first-time buyers make the mistake of shopping for rates too early and choosing a lender for their mortgage pre-approval letter based solely on a rate quote they see online. Let me tell you about Jessica, who fell into this trap. Now, she was drawn to a super low rate she found online. So she got pre-approved with an internet lender. She assumed this below market rate meant that she was getting a great deal. However, the issues started piling up. The lender's pre-approval letter and customer service were weak. And when Jessica finally found a condo she loved, she was ready to lock in her interest rate, only to find out that the rate and payment were much higher than expected. Now today I'll explain why choosing a lender for your pre-approval based on a rate quote is not the best strategy. Instead, I'll show you how splitting the mortgage process into two parts, one for pre-approval and one for rate shopping, will help you get the best deal and a smoother home buying experience. So let's first talk about what a mortgage quote is. A mortgage rate quote is an informal preliminary estimate that gives you an idea of the interest rate and cost you might expect based on some basic financial information you provide to the lender. It's often used as a way to gauge the current market rates. However, a mortgage rate quote is not binding. It can change and might not include all of the fees or detailed costs associated with the loan. Think of it as a starting point. The quote can help determine the rate, but it's far from the full picture. Now, on the other hand, an official loan estimate is a formal document that lenders must send you after you apply for a mortgage. It provides a detailed breakdown of the loan, including interest rate, monthly payment, closing costs, and the estimated cash to close. Because the loan estimate is standardized, you can compare apples to apples. It's accurate and binding, giving you a better idea of the loan's costs. So while a mortgage quote gives you a rough idea of rates, a loan estimate is a more accurate, reliable snapshot of what you'll be paying if you move forward with that lender's offer. Now that you understand the difference between a mortgage quote and a loan estimate, you might wonder why it's not a great idea to choose a lender based on a rate quote. Well, here's the thing. Focusing only on a quote can lead you to make poor decisions and miss out on opportunities. Many internet lenders don't verify your financial information up front, so you end up with a weak pre-approval letter, which is not going to help you when competing against other offers. And when you're ready to lock in, the interest rate offered by the internet lender might be higher than the rate offered by local lenders. And that's exactly what happened to Jessica. When she finally signed a contract for a condo, the rate and closing costs were higher. The rate on her loan estimate was 0.25% higher than the rate we offered her. The best approach is to split the mortgage process into two parts. First, secure a verified pre-approval with a local lender. Start by working with a local lender to get a verified pre-approval. This step ensures that your pre-approval letter is solid and credible. With a local lender, you're more likely to have a personal touch, someone who understands the local market and is more transparent about the process. A verified pre-approval gives you the confidence to make an offer to buy your dream home and show sellers you're serious. The pre-approval process also ensures that you know exactly how much you can afford and that your lender has adequately verified your financial information. Step 2 is to shop for the best mortgage deal once you're under contract. And when you're under contract, it's time to shop for the best mortgage rate. You'll have a sales contract and you can confidently shop around for mortgage offers. This is when you can get official loan estimates from multiple lenders, compare their offers, and lock in the best deal. To sum it up, focusing solely on a mortgage rate quote can lead to missed opportunities and higher rates later. The best strategy is to split the mortgage process in two parts. First, get a verified pre-approval letter from a trusted lender like NewCastle Home Loans. Then, when you're under contract, shop for the best deal and lock it in. And by doing this, you'll be able to compete with other buyers more effectively and avoid rate surprises when it comes time to close. Are you ready to start? Click the link below and get pre-approved today.